here's my year-end, prediction coming up on the indexes. This obviously I just talked about it, right? 25% 2023, 24, 25% with the sell-off that we had, 5, 6, 3, 4% last week of the year. Without that, it would have been, over 50%. I think we're just a tad over 50 or under 50% for 2 years. And there were a lot of predictions made. Nobody was right, except Tom Lee of FundStrat. He's always bullish. He's a perma bull. He's always bullish. You watch him on CNBC. He was saying, look, the guy's dead on. He's been saying for 2 years, he's been saying buy every dip. You can't argue with success, man. The guy is dead on. I mean, if you follow Tom Lee, there are reasons for that, by the way, because the government cannot allow the market to go down. It just can't. Everybody's pensions is in there. Everybody's 401k is in there. It just can't allow the market to crash. But then the people who have $7 trillion in money markets want to crash so they can buy stuff cheaply, right? I mean, look, we had corrections, but buy every dip going back in history has been the right thing to do. And so Wall Street put out predictions. I'm going to put out my predictions right at the end of the segment, but I want to show you guys what Wall Street is thinking going forward. So Wall Street predictions for the market and economy in 2025. All right. So Wall Street average S&P 500 forecast, right? Let's assume S&P 500 is at 5,900. Not assume, but we are there. 14%, okay? So on the right-hand side, you guys have all the major names: UBS, Goldman, Morgan, Citi, JP Morgan, Evercore, Barclays, BofA, BMO, HSBC, all these people, right? All right, so let's say we're at 5,900. S&P outlook, for them, first of all, nobody has an outlook that's below the current market price. Nobody. So this starts from least bullish to most bullish, okay? UBS is saying we're going to end the 2025 at 6,400, which is up 8.8%. Goldman is saying 6,500. Morgan saying the same thing. Citi saying the same thing. JP Morgan is saying the same thing. Evercore is 66. Barclays is 66. Bank of America, I don't know. It was being a joker. Put the quadruple 6 there. I'm like, okay, whatever. HSBC is 67 and goes up and up. And the most bullish one is Oppenheimer at 7,100. Okay. So pretty much everybody who is somebody on Wall Street is saying market's going to go. And on average, the average for all these is 14%. That's a damn good return year, right? After 2 years of 20+% returns. And that also coincides with that graph that I just showed you guys, right? After 2 strong years, the third year is pretty good. And after that, we peter out. But, okay, here's my prediction. Definitely going to be higher volatility year. There are ways to protect yourself, obviously. I am looking at earnings, right? The earnings potential of the S&P 500 is pegged right about $260. Okay, $260. The multiple is high, so I'm still has to stay with the high multiple because the Fed is cutting rates. On an interest rate cutting cycle, you can't put a lower multiple on it. So at the moment, we're about $210 in earnings. Okay, the estimates, low estimates are about 250, high estimates are as high as 275, 280. So if you take the S&P 500 divided by, let's say, 270, okay, we're looking at like 23 PE, price to earnings ratio, and S&P 500, 23 is pretty high. Average has been 17, 18. So there's a lot of downside here if the downside happens. But if the earnings are going to be about even at 250, my prediction is market's going to go up, not average 14%. I think we're going to be from where we are, where we finished the year. I think we're going to go to 6,500. Well, hold me down to it. 6,500 as a high. And I think we're going to finish the year at 6,300 on the S&P 500, which is about 7% higher than where we are now. But I think we're going to go higher initially, 6,500, which will put us about 13, 14% higher. Is it going to be another 20% year? We never had one in history. Could be. I mean, if Oppenheimer is right, we're going to have another 20% year in 2025. What are the headwinds? A lot. Inflation coming back, Fed stopping cutting rates and start raising rates because they made a mistake cutting rates to start with. Deficits soaring. Okay. Government spending getting shut down because we know about Doge, right? With Elon and Vivek. There is a lot of headwinds. There's potential, hurdles out there. If you cut spending, government spending too much, that will put you in a bad situation because 80% of our economy is on consumer spending and government spending, right? We don't manufacture much. Another headwind is going to be the strength of the US dollar. US dollar keeps getting stronger and stronger and stronger. That could be a problem. But the biggest problem I see is inflation coming back. If inflation comes back and Fed does a 180 and goes, oh, no, we shouldn't have cut rates, we're going to start raising rates, the market will crash. I have no doubt about that because we're already at 23, 24 PE. Historically, that's a very high level. But at the moment, don't argue with the Fed. Fed is cutting rates. Go with the flow. My prediction, 6,500 as a high on the S&P. Finish the year at 6,300. We'll see if I'm still around by the end of the year. Well, you guys will hold me to it.